What up, team? All right, I'm not gonna do a full week's breakdown, but I'll point out a few things in this video that I think were worth journaling from last week. I'll point out one of my mistakes from Friday, just to kind of clear it out of my own system. Yeah. So, even starting with New Zealand USD. Come, actually, let's look at the DXY first. Let's come here. All right. Replay. Four. All right, let's just start here. Okay. All right. The key piece in the DXY was obviously this fair value gap right here, right? And let's see, price didn't necessarily run that low. All right, cool. So pay attention to this low, right? This low is ran, and honestly, I didn't see this until now, but this would have prompted all buying opportunities for us on the euro. Because if we look at the daily chart on the euro, and we all have to do a better job of, this should be a part of our, before we even come into the week. From a higher time frame perspective, we should all be, especially if we're trading indices, S&P 500, NAS 100, and US 30, and then any of the majors. And when it comes to majors, I specifically only like to trade the XXX USD pairs. I just prefer that price action. It's just whole lot smoother to me. But nonetheless, pre-week analysis, right? We should all be looking for, or just every day, right? We should be looking for S&T divergence. So if we come back to this low, or this high, I'm looking at the DXY chart. This high created July 14th, right? Inversely, that would be the low created July 14th. Well, as soon as this low is run, right, on the 22nd, and then they dive a little deeper on the what is that, the 23rd. When we see this, right, failed attempt, and then on a lower time frame, any market structural shift, right, would solidify this smart money divergence, right? So from that point, we should have been prioritizing, at least the very first fair value gap, right? Because where else is price going to draw to, right? Price has to be pulled to something. So in this case, right, price is magnetized. I don't know why that's not working. Price is pulled. I'm sorry. This is magnet. Price is pulled, to this fair value gap here. All right. So S&T divergence from this low to this low, this high to that high, right? Failed. We should have been, wanting to long here. And I'm not saying come in every day, being hung up on the long buys, because obviously we're in a downtrending market, right? But as I always tell you guys, just pay attention to maybe the last, the most consistent series of candles, which we're seeing sell side or previous days lows being taken, and every now and then you'll get a retracement, and the price will go back into its the original order flow, right? You can see the difference in this corrective move as opposed to how much volume is behind the downside push, right? And so all of this, right, and you can see how this is very weak-handed, right? But you can see how price just kind of correctively made its way into this fair value gap. And once we meet that objective there, then price, completely, rejects from this area. But all they were doing all week was just building up buy side liquidity, right? So what I'd expect, and I'm gonna play out this, right? We tap into that fair value gap, and now here we have equal highs. So I would expect early in the week, as early as Monday, we should be able to get a nice short on all XXX USD pairs. So I'm coming into next week, and I'm thinking shorts the whole way through, right? We've kind of started our previous day's low, taking that liquidity pool out. So I would expect price to continue in that same manner. There's no way, and I'm not saying this can't happen, but I am not at all expecting price to run back above these levels, right? So these are the times, if you're taking a challenge or something like that, right? This would be your market. This is your market. You've gotten what you want. You gotten price pushed into the fair value gap. It's rejected all of these days. So, you should be happy about coming into the market next week and preparing to short. Okay. Now, when it comes to the overall projection, which I believe that price, I'm gonna start from this swing high, right? You have a high, higher high, and then you have this short-term high here. I'm expecting price to at least come to this 97.08 level. And if we pull it here, yeah, I'm gonna take this one, right? Because this is the swing that started the decline, right? I'm sorry, actually we should be right here. Yeah, so around 0.9800, which is a whole number. So this is kind of first target for me. I like to take the whole number instead of pushing out here. Right. So I'd love to see Monday kind of give some type of false or protractionary move up, and then we get the true move down. All right, let's switch these charts back. All right, here you go. All right, so once again, look at all of the failed attempts to go higher. All right, so now let's get into just looking at a few things that happened throughout this week. Wednesday, so of course you guys know about the buys on Tuesday. All right, here's something that's worth journaling here, right? All right, coming into this week, we should have known that this was the ultimate objective right here, right? Well, here's where we have to start applying our awareness in terms of weekly profiles, daily profiles, right? And what I mean by profile is the way in which price, the narrative that price provides for that week, right? So in this week we had a Monday, Monday kind of build the sell side liquidity as we took out sell side liquidity, and then Monday would actually turn this around, right? So we had a Monday, right, sweeping out a previous month's low, and then we had a Tuesday create the low of the week, right? Wednesday come back, retrace, and then we see Thursday, Friday, boom, right? Friday took out Thursday's low, right? So here's a a weekly profile, right? So start getting used to seeing the lows of the week created on low or high of the week created on a Tuesday, right? And just kind of pay attention to how that story plays out, because it's kind of, sometimes it can be I don't want to say a consistent thing, but it's something that happens more times than not, right? So see, Monday and Tuesday creates the low of the week, right? Wednesday, optimal trade entry, pushing into Thursday, continuation, Monday, Friday continuation into the fair value gap, right? And then boom, right? So this fair value gap, this was the ultimate objective for this week, right? That objective has been met. We have a pretty nice market structural shift, and we're expecting to see price run to this area next week. Tons of low resistance liquidity, right? So you can see the narrative built here. Check one more thing. This would be the swing high. Yeah. All right, cool. So I really like this because, you know, here's some confluence with price reaching around this level in here. All right, so Monday, Tuesday, Wednesday OTE. Thursday was sort of an OTE also. Yeah. Thursday just pushed into 62% of the Wednesday to Thursday high. Optimal trade entry. And then we see price reverse as we push into the next day. So this would be, you know, this is a market maker sell model, right? Where you get your consolidation, you have a low risk buy. We'll start focusing on this, and then you have your second low risk buy, and then up here we have the smart money reversal, right? Low risk buy, smart money reversal, right? So what we should see is a, you know, our expectation is a low risk sell, and then it should run us into here, right? And then we should see price go back into possibly a consolidation here, and then we'll see what we get, right? All right, some things to point out in price. I think Vitor took this trade here, which was, which was beautiful. So I think I made a breakdown about this area right here. Vitor actually took the trade from this fair value gap, I believe, or at least somewhere around it. But I think on another time frame, it's much more clear. Yeah. Right, so a series of up close candles, down move. Here's the imbalance inside of that. Right, bingo. And then price shifts away. But we should have been, after this market structural shift here, going back to seeing the S&T divergence and seeing how much volatility was in this move, and then look at the corrective move back down. Right. Boom, another strong expansion up. All right, and then here on Wednesday, right, here's an optimal trade entry, right, at 62%. And then price comes to, this breaker right here. And then more importantly, this is, I think, 50% of the fair value gap. Right, so 50% is here. Price digs down here, so we can look into a lower time frame and see, because this is 30 minutes, so we can look on the 3 minute to see if there was something that would have actually prompted those buys. Ideally, we'd like to see price come to this area though. But what's beautiful about this is what are we responding to? True day open, right? Right. So once this is cleared, you can either take a buy from here, but I would expect that to be run. So this trade will be dependent on your risk acceptance, 17 pips, 21 pips. Let's see if you were to go here. So you would have one TP here, but of course there's equal highs. Well, not yet. Equal highs not created yet. Well, equal highs here, right? Right. So when you're using these fib extensions, right, just you want to, especially if they're aligned near, obvious liquidity pools, and that's kind of, what you want to go by. All right. So here's a 1 to 2, right? So I would, this trade could have been taken. I think throughout this week, I was so caught up on the idea that price is bearish until I didn't even see the S&T divergence. That's why it's so good to back test and kind of go through the week, and then you kind of wash out all of your incompetencies or mistakes from the last week. All right, so price coming here. Do they take this out? All right, so the day is over at this point, but they actually respect that order block. All right, see, cool. Yeah, you can see we make it right to 27, and then we see a little rejection, and we push higher. Right. Buy entries could have been taken from here also. So once you get this, this area pushes away. Right, so we have a sweep of the, let's see, 8:30. We're under true day open. We're under 8:30 opening price. So here's something to note about the opening price. If we're expecting a bullish day, let's say we're expecting a bullish day, and the opening price is here. All right, I'll make it orange. And price opens at midnight and it runs and rallies above, right? And let's say the 8:30 opening price is here. So you're expecting a bullish day, and ideally we'd like to see price under the midnight opening price, because that's where our better buying opportunities are going to come from. Well, in that manner, if price is already well and beyond the opening price, then what you do is at 8:30 you recalibrate, and you guys, if you go back in the charts on your own, you'll see price will dive under that 8:30 opening price, right? And sometimes it is used as support, just like the true day open, right? So go back, look at that on your charts, apply it in next week's price action. Okay, but looking back at this is, by now, you guys should have photographic memory of this. This is it. This is literally it here, right? Of course, context goes around it, but this is it. Series of down close candles, right? Up move, and then we're just looking for the most obvious fair value gap, right? And then you can see price comes directly to the high of that candle, and the fair value gap is here, right? So this is happening in that 10:30 window. So I don't know how we missed this. I didn't catch it. I don't know if anybody else caught it. 17 pip stop. Low resistance liquidity right here. So this is obvious. Boom. So you'd be targeting here, and then maybe you scale in again at the retracement in here. But this is too late. You wouldn't enter here. Way too late. It's 5 o'clock New York Eastern time. Right. So that's that. Let's look at New Zealand USD. Oh, going back. Sorry. What I was truly trying to point out was the weekly objective was met early in the week, right? So once you guys start studying market profiles and how narratives play out, then we could have gotten you would anticipate that for the rest of the week, price might find some buy side objective, and it's no different than this cycle from buy side liquidity to sell side liquidity. Sorry, and then back around, right? So price took out buy side, attacked sell side, right? External. Now what? Internal, right? That's day one of every lesson that you guys received on the mentorship. And the reason we do that is so we can continuously be conscious of this, right? Buy side liquidity taken, sell side, right? Now what price is going to do is reprice to internal range liquidity and look to balance any type of imbalance within that range. And once again, recreated all of this, right? New Zealand USD DC asked for a breakdown of this trade. So I didn't start looking at New Zealand until we got here, because these are the highly probable scenarios, guys, right? When the market direction is obvious, right? Right now it's obvious that we're in a bearish market, okay? I keep saying this. Use higher time frame fair value gaps as your POIs. By now, you guys should see that is what price is seeking, right? It's not to look for a higher time frame order block. You're looking for the higher time frame fair value gap, and then you wait until the order block forms inside of that higher time frame fair value gap. So you're not trying to look for an order block that's already been formed, right? We're not focused on that. We're focused on the fair value gaps, because by now you guys should see that is what price is magnetized to, right? So these scenarios here, right? This is the best storyline you can get in price. And then the reason I marked this area here is because this is the close of this breaker, right? Price comes to that here, right? Completely fill in the fair value gap. So remember, once that happens, we should expect a fair swing, right? So these trades are based on the idea that, and it happens here also. Field, fair swing, right? Price shifts away. And then this is obvious because I would just consider all of this relatively equal lows. All right, so DC, these shorts are based on the idea that price has created an intermediate term high, right? We've took out a short term high. Right? We've completely rebalanced this daily fair value gap. And then we'd expect a fair swing, and then we actually get the fair swing. So price sweeps liquidity, tries to make a second run up, and fails, right? So this is the answer, right? And this is very strong because price actually comes and comes back to this level even on Friday. So once you get the fair swing DC, right, all we're doing is we're locating the fair value gap. Okay. So we're locating the fair value gap. And you can see this as a breaker, but what's most important about this is the fair value gap. All right, so we're shorting from that FVG. Stops will go here, and then we're attacking all of this, right? So play it out in time, and price kind of struggled. It took an entire day, but you can see, right? Price is not going beyond the opening or the high of that candle right here. Okay, so these are the shorts, DC. Let's see projections. Basically, what I'm doing here, if you're questioning, I'm just taking deviations of the move that actually created the decline lower, and it was this high. You know, you could go by this one, but I prefer to go by this one because it's the most recent decline in price. Right, this here never runs this high, so this is nothing but more of a complex pullback. And then you can see how 2 standard deviations of this swing aligns with these relatively equal lows. Right. So this trade here was a 1 to 15:30, 1 to 5, right? Took a day to take profit. Let's look at S&P 500. So S&P 500 buys from Thursday, right? This is a beautiful trade. 30-minute chart. Right, so what I'm looking at is this, and right in time is an important factor. So I'm seeing this area here. I'm seeing true day open here, and then here's sell side liquidity up under these areas, and then as we approach 9:30, right, price starts to decline, and then right at 9:30, we're inside of this fair value gap. Boom. And then price gets away. Right? And then even if you missed that, you could have gotten in again right here. I think it's on a 15-minute. Yeah. 15-minute, right? Remember, here's the answer. Series of down closed candles. Boom. Right? And then all price does is come right to true day open. So I don't know if there's a 10-minute. Yeah. 5-minute maybe. Yeah. Series of down closed candles. Up move. So this entire area would have been nice, right? Market structure will shift. This is just an optimal trade entry. OTE. 79%, and then we get away. Let's see if projections are hit. The price needed. So this was the weekend opening gap, right? So I was pretty sure that price would come up here. I actually thought they would fill it in completely, but they didn't. So responding to true day open, here's a series of down closed candles, up move with the fair value gap inside, right? Remember, that is the answer for us. This would have been very nice because we left equal highs, so it's pretty obvious that they were going to make a run up. And I'm just trying to see the projections. If price meets which I know it gets here, but I don't know if it gets here. All right, so we dig into the fair value gap. Boom. All right. So once price reaches here, right, now I'm looking for shorts. Here's your accumulation, right? False run lower. All this run does is push into this FVG, right? So we push into the fair value gap, and which fuels this run higher, right? We take some sell side. Look how slow this move is. Why you have to wait until the right times. All right, and then price pushes above here. 8:30 open, and price is here, right? So we push above 8:30 open. We're above true day open. We tap inside of here, and then here's where we go to a lower time frame. Right? What is this? Series of up closed candles, down move. Once it is cleared here, right, we look up and then we find a fair value gap. Now I actually entered, right? Once price got here, I actually entered, right? So I'm not, my ego is far removed from trading at this point. I'm not worried about prices a couple pips away, right? When I see this, right, I want to get in because I'm very sure about where price is going, right? And then we get this expansion right at 10 a.m. And price, yeah, well, I'm just trying to see exact because this move was so fast until I honestly didn't even have time to think about a target. But it did reject and pull back very fast. Actually, here, this was it. I'm sorry. So it came into this area right here. Pulled up, and it actually, so the very first time I'm in here, it fell, came back up. And I didn't even, I hesitated on this one. I don't know why. Just the way the move happened, I just didn't trust. I felt like they would come and fill this entire area up, right? But what I should have saw was that here was buy side liquidity at the original high that I shorted at. This high fell down, came back up, took out internal range liquidity. So look, external, internal, boom, right? Price delivery cycle, consolidation, expansion, reversal, retracement, reversal. See how that works? So this was beautiful also, and it was pretty obvious. I'll show you the SMT divergence with US 30. And I actually saw this, I think I mentioned it to Atlanta, and I still didn't take the trade. So it happens. I get mixed up with my psychology every now and then. You know, I'll let certain moves in the market kind of get to me, but that's why we journal. Okay. All right, so here's the SMT divergence, right? Here. Actually, let's take this high. Right, so you see 500 running this high, and the same high is not run by U30, right? Okay, so this is the smart money accumulation right here. Back to single-handed chart. Gold. So the ultimate drawn liquidity for gold was here. You know, overall, but for this week, you know, I have been saying that this would be the draw, which happened on Monday. So once that happened, right, price decided to seek upside objectives. Here's a breaker. So we meet that breaker. At first I thought we reversed from here because we filled in this fair value gap, but price had other plans. Hourly chart. All right, so here's where the gold shorts come in at.